Before we get into today's video, this is not financial advice, just my personal opinion. Now let's get into it. What to do, guys? Screw, it's your boy Red here with another video. Today we're talking about Xom Levels going into Friday's trading session. To start it off, I just want to give a big shout out to the Discord. I love all of y'all. Y'all are great people. I'm glad that I can have a strong community to be behind and succeed with. So big shout out to everybody in the gas crew across the whole board. Love you. Now to business. So with these levels today, I want to talk first with bears. And I know a lot of you are probably like, oh, why do you want to start off with bears when we look like we're all bullish? But that's just because you have to keep an open mind. So go ahead and get your notepads out, take some notes. These are the key levels that I have found, and I will go over how I found them and how you can look for them for yourself as well. So we're first going to be looking at how we rejected off of this 1991 zone. That is a big resistance for any further push upwards, and from that resistance we had pushed down to our initial support zone. And how I trade, which is why there's boxes on here, I trade in fair value gap zones. So how I make these, for anybody that is curious, from the lowest point of this wick to the top of this wick, I drag over to the left and also over to the right to give me a whole wide zone for the stock to come down and wherever. And also it's also good to look over to the left whenever you're trading, trying to find out where support, where resistance is, where's key levels of what price action did at this level. And so if you look to the left in my box, you see on the 4 hour, this is the 4 hour time frame, that there was another doji candle, doji reversal at this 113, what is it, 113.06 to 113.50 initial, like the 113.30 zone that I've been talking about, and then we reversed up to go touch that 119, what was it, 119.91 resistance. So now that we've come into this zone again and we've respected it, that is a strong support. So now you understand how you can find a support zone. So boom, just like that, that's where we're at. Alright, so talking about the bear key levels, our first key level as of now that for bears we would have to break is 13.50 to 13 zone, and that zone right there is where our initial support is. So for any bears to come in, we would have to see an initial push tomorrow and break straight through that to see any further downside, to then go now down to 12.50 to then 12 to 11.50 and 11, because as you know, XOM moves in halves and wholes. So just keep that in mind, put that on your notes. XOM moves in halves or wholes. And our first bear support, or that's technically our bullish support, and our bearish resistance. So that 113 to 113.50 zone, we need to break through that, and then we can start seeing that push to the lower side. Until then, we're bullish right now. So let's talk about when we get even further past that as a bear. Okay, so let's look at our chart. So you see right here where we came down to this, let's say to our 111 zone. This would be a good spot for support. Now, if you can tell me why, that's fantastic. And I'm about to tell you why. Because we came down, and then what do? We reversed up. So what does this zone tell us? That it's a good support for bulls to come in, buy, and go up. And that led us to our high. So with that, that would be a good next support after the initial breakthrough of 113 and to the downside. That is where the next support for bulls would be. And then for bears, you would have to break past that support to now we're going down to the 108 area. And as you can see, that is this area right around here. And then any further push down that, if bulls can't keep it up and use that as a good support, our next support is going to be in the 104.50 to 105 area, and so on and so forth. Now, if that level doesn't hold compared to the other three levels that I already gave, the 113 to the 111 to the 108, if that 104.50 to 105 zone doesn't hold for bulls, then then we'll start talking about that. But that's the lowest level I'm going to give you. The first three levels are good enough just to have some hindsight for bears. So just to keep an open mind of where we could be headed, where support is for bulls, and where the zones that we'd be breaking through as bears. But that's enough with bear talk. I know everybody's been waiting on this now, so let's get into talking about the bulls and what we all think is going to happen, and that is go through our all-time high, make new all-time highs, and ultimately just get a huge bag on call options. And that's what that's just what traders we would all love to happen. You know what I mean? But that's not exactly how it always happens. It's not just one smooth push up. It's got choppiness. It comes down, it gets a little pullback for more buying power to then punch it up through the roof. So for these bull levels, okay, today our first bull level was 116. It was 116.56. This first blue line I have here. Okay, that was previous month high, and you can see right here from July to June, this red wick candle, let me zoom in on it, right here, this red wick candle was the highest point of the whole month of June, and then July came out. But right here, that was a resistance key, and then as you see, it broke down, but then we came down further to test support, and then we needed to break past that, and sure enough we did, and now we are pushing up on our way to the 18 mark, and we hit it, which is awesome. So whoever was holding calls all day, props to you. You did awesome. I know you got that bag. That was amazing. But now, with that being said, now that we're in this 17 to 1750 range, or really 17 to 18 range, our highest point of the day was 1803. So now that is our resistance, is that 18 mark. And obviously this is my fair value gap, and how this is charted out is from the initial push down from the resistance of 1991. You have this first candle, then the middle candle, and then the third candle. My box for fair values is the middle candle from the top of the wick to the bottom of the wick, and then dragged over. So that whole box right there is resistance. We have to get past 18, 1850. Then we have to get up to 19, which is the top of the box. And then once we get to 1950, now we have to blow past 1950, because we move in halves and wholes. And then our main resistance for bulls to go any higher is that 1991. So once we can get past that 18 mark, hold above it, then we get past the 1850, hold above it, and then get out of the red box above 19, then we're looking a little bit more promising. And then hopefully, if all goes well, and 1991 doesn't hold as resistance, then we're going up. And then now the next key level past that is going to be from 120 to 120.68, and I'm going to show you why. That's where my second red box is, because if you look over here in the month of April, we had a gap down. Okay, so we had a gap down, and then we had long wicks to try to fill that gap, and we got close. So from the top of this wick here, from the top, which is 120.20, to the bottom of this last candle before the initial gap down, that is a fair value gap right there. So we need to be able to fill that zone and then hold above, I believe it is 121.74. If we can claim and hold above 121.74, then we can start looking to push up into our next resistance zone from 121.74 to 123.76 at the very top. So let's retrace a little bit. So we're on our way up. We need to get past 118, 118.50, 119, 119.50, and then our ultimate resistance, if we don't reverse, is 1991. And then let's theoretically say this: if we do reverse on 1991, now we're going to start making a double top. And I'll show what a double top is. Let me look it up for you. This is a double top pattern right here. So you have your first initial drive to the resistance zone, then down to that 113.30 zone, which is now going to be our neckline, to then going back up to the resistance. If that 1991 resistance right here holds and we come down back through and then break out through our neckline, then that's when bears are going to start kicking in. And if that 1991 resistance isn't broken by Wednesday, in my opinion, if this isn't broken by Wednesday of next week, we have earnings that come out that Friday. And my theory is that with these first 3 quarters of every year, they come in a little bit short, and I just have a strong feeling that the next Friday earnings for XOM is going to come in short, and then that's just going to help if that 1991 does hold as resistance to start forming that double top. That's just going to help us go even further down with those earnings. So that being said, just because I'm thinking that the earnings are going to come in lower, and then if the 1991 does hold as resistance and we start forming that double top, doesn't mean I'm exactly right. We could break through the 1991 and then earnings come in good, and then that boosts us up even further to blow past these levels for the bulls. So like I've said before in my previous videos, make sure you're just keeping an open mind. This is not financial advice. This is purely my opinion, but keep an open mind to play both sides and be aware of the market and the stock itself to know where it could and will possibly go for the future. But that's it for the video, guys. I hope this was very helpful. Please get in with me when you can after the video. Let me know how it is, if it helped you out. If you have any questions, get in with me, and I will catch y'all in the next one. Peace.